Now, credit seems to play an important role when applying for mortgage. What are your credit requirements?
Absolutely. So again, I'm always going to say each company is different because they are. The previous company I was working with, we had to have a minimum of a 580 credit score. But at Nexa Mortgage, you could go down to a 500 credit score, which is great.
Wow.
Yeah, it's great for people that have had some kind of circumstance that's happened in their life that maybe they haven't been able to get back from. And so a 500 credit score, we could do an FHA loan, which would require a 10% down payment. Or if you are VA, I don't know if you handle a lot of like veterans or
I don't have a lot, but I did have.
Yeah, I mean it's a great loan for people that have served our country, but you could go down to a 500 credit score and they would still have no down payment,
Wow.
which is great. And then when you're talking more about conventional programs, the minimum is a 620 credit score that you need, so you can go down to a 620. And then when you're talking like jumbo loans, where you're going over that loan limit that we talked about of in your counties, it's like that 726 200 loan amount. Then you're probably around like a 680, maybe a 660. So you can still buy a high priced home, even though your credit scores are below a 700, but interest rates are going to also be different, right? Because the higher FICO score, the better interest rate you get, because it's less riskier for that investor because you've shown that you've been able to manage your credit over history. So that's why interest rates and credit scores, kind of go hand in hand together.
Yep.
Yeah.
How about income? I know the income is another important fact when applying for mortgage. Do you have any no income verification program? Because, sometimes I have some self-employed people, and or investors which they are looking, to buy like rental properties.
Yeah.
And it's much easier for them to.
Yeah. And it's not only that too. It's people that even like worked, and because of COVID, maybe they've lost clients, right? Their business had to shut down and they can't document 2 years of tax returns anymore. So we have access to what are called non-QM loans or non-qualified mortgages, which are more of your non-traditional type of loans, which include no income and no ratio. DSCR, do you know what that stands for?
I heard about this program. I think it's based on the income of the property which you are buying.
Yeah, so it's perfect for investors, for your clients that want to buy an investment property. You don't even have to be an avid investor. You could be a first-time investor, and you don't have to you don't show income, you don't show debt ratio. You have to have some reserves. It requires a larger down payment, like all investment properties do. You're going to be somewhere around like 25% down payment, which is even a traditional investment property. And they use the projected rent from the appraisal, or if it's already rented, what it's been renting for. And as long as that can offset the new mortgage payment by a certain percentage, then you would qualify to get that loan. So what I tell people is, think about it. If you're doing no income, no debt ratio, you're going to have higher interest rates, right? So people sometimes are like, wow, the rate's high, but they're lending you money, not even knowing if they pay it back. So and most of those loans for investors are short term, right? So like 2, 3, 4 years where you're going to maybe flip the property. And we have properties like that are fix and flip for investors. You can do self-employed with 1 year of tax returns. You could do 1099 only, P&L only. The opportunities are endless now. It's it has to meet everything, right? So your credit, your income situation, how much of a down payment you have. So we kind of mush all of that together and see what product works best for you.
And you're going to cover the gap, like let's say you have lower credit score or no income, sometime will be covered by a higher interest rate.
Yeah, just those programs in particular will always have a higher rate. Regardless of credit score, because again, they're lending on something that they can't document. So what is a little bit better is a bank statement loan for people that are self-employed. So they'll show either their personal bank statements or their business bank statements. and we can use the deposits that they've made, because most people that are self-employed have a lot of expenses that they write off, right? So their tax returns show a very small amount of income that they've earned, but their bank statements show a lot of deposits coming in. So we can average their deposits and use that as income as well, which is another way to help people that are self-employed.